I was thinking a lot about sort of like a post-COVID world and what that's going to look like for traders, what it's going to look like for just investing in general, just in business. Like, think about like maybe not at the end of the year, but let's talk about like 2022. Like really, like vaccine, like things are starting to get back to normal. Like, what does back to normal look like? You know, it's still going to be a Zoom world, a lot less meetings. Like, what do you?
It's a great question. I think I haven't been asked that, so a good one. Depends on your age group and where you are in the wealth stack, I would think, right? So I'm in the age group where I did my travel. I think I know where I like LA, New York, Phoenix, San Diego, Tuscany. Maybe I'll throw in a new place, the new Hong Kong, maybe Singapore if it's not Hong Kong.
Singapore's dope.
Yeah, for Asia, maybe Japan because of the food.
Oh,
but I'm gonna up my travel to a different style. You know, from hotels tonight to just more luxury. The regular millennial, the up and comer, the people that have to build a brand and reputation beyond just the web. I think travel comes back. I think cruises were done. So I don't know, maybe it's a factor of the middle class going away, so cruises never stop. But travel won't stop. But it'll look different. It has to. You know, and at some point, the catalyst, prices and money, if they continue to come like this, the catalyst for buying land-based businesses will get good. But at the same time, I think what we've learned from software, from this and the digital move, is that conglomerate investing, land-based conglomerate investing, is not that attractive.
What does that mean? What does that mean?
It means for new money, meaning like if I want to invest in Netflix, I'm not going to buy Disney because it's cheaper because I get their plus for free. I think that's cheap in COVID. What do I need that? What do I have to be in charge of being the analyst? Give me pure plays. Let me jujitsu my portfolio, through bundling ETFs, bundling stocks in a simple ETF for myself, or buying an ETF of a sector. But there'll be no S&P competition. It'll be people focused on like, I just want to try and beat, 5% a year because that's what I can get in, munis. So I'm going to take 40% of my money, invest it as aggressively as I can, and keep 60% in cash. This whole 60-40 portfolio will get unbundled. And in terms of the economy, we're social creatures. So, I think things will just be different. You're not going to not want to cook at home because Amazon and Instacart and all these things make it easy to get that stuff, right? And now we have habits after 4 or 5 months, and it'll probably be another 6 to 8 months at minimum for most people to get comfortable leaving the house. Kids go back to school. Grandparents do need to worry about COVID still. So you can argue both sides of the fence, but either way, old people are screwed and they're upset. And they're going to have to take risk over the next year. So there's like a major crisis coming in healthcare. So nobody knows how that plays out. Nobody knows how the COVID plays out. So to look forward to 5 years is probably too hard. I'm trying to focus on, is this trend from digital going to continue? And what do the old companies like Exxon and Disney and companies that half and half, like are half digital, half land-based, how do they split up their company?
Let me ask you this. You talk about the investors, right? But what about like the fact that 75% of all US equities are owned by people that are over 55 years old? So if the people that are under 55 years old only own 25% of the entire market.
Yeah, they should be thrilled that Robinhood exists because now there's a distributed way to just stick the shares on them. I'm more worried about the bond market.
Good point.
I worry about the bond market. It's so much bigger than the stock market.
Yeah. So then what happens in an environment? We haven't seen a rising interest rate environment in over 40 years. So like what happens in an environment where stocks and bonds are both falling together and, in future environments, it has to, right? What does that look like? Imagine like, look, 60-40 portfolios are just so like kind of like common sense and like sort of rule of thumb. But one day in an environment that stocks and bonds are both falling together, interest rates are going up and stocks are coming off. Like, man, that's a scary thought for that thought process.
Yeah, I mean, to get ahead of that, like I said, stop competing with the S&P. Like, these new investors don't know what S&P, they don't give a fuck. You may try and teach them what the S&P index is, but they're like, what the hell's gold doing? What the hell's crypto doing? They've got
Tesla, Apple, Amazon, all the products they use, Snapchat.
So in that world, there will be bear markets. And so we don't know until there's a true, 30 days is not a bear market like March.
But didn't this market prove the stock market's crashing? Maybe the most violent stock market crash of all time, I guess, depending on who you ask, right? And there were stocks that did very well. Zoom and DocuSign and Newmont Mining. There were stocks that money was flowing into, so there's opportunity to make money even in stock market crashes. You know what I mean? There are stocks going up. 15 years from now, 20 years from now, we wake up in the morning. Are we even waking up in the morning? Are there still 6.5 hours of stock trading? Like, are the hours changing? Is going to be 24 hours like Bitcoin? Are we heading in that direction for the stock market? Are we going to get shorter? Everybody says the market should be open for 1 hour a day, right? So what direction is it going to go? More hours or less?
I'd be happy with less, just because of anxiety that it creates. Like,
okay, but what you'd be happy with is less relevant.
I think it'd be very hard in my lifetime to see the market hours change for stocks. We're already seeing it change for crypto. You can trade at midnight. The Fed, I joke that the Fed has a Robinhood account and they're buying shit at weird hours. There's just some homer in a room pushing buttons at weird times to, calm the markets.
Would you call him some homer?
Yeah. So
what is a homer? Like a Homer Simpson?
Millennial watching Simpsons 24/7, and someone just squawks in his ear, buys S&P futures.
That's what a homer is?
Yeah.
Okay.
So, that's what the old people call millennials. So
is that true?
I don't know. But I am old, and that's what I call them. So in a world where the Fed's pushing buttons and getting homers to buy S&P at weird hours, I think we're already there. I think there is enough of a workflow around because of this generation getting onboarded in a market hour situation, I think, and the fact that people are home. I think it'll take a long time for the market hours to go away, but they could, because now there's no office. So I don't want to speculate on that. I think good investors will be able to. I think there's going to be a million Warren Buffetts, not one. There's going
to be liquidity at weird hours eventually. Like, if you really want to get out of something at 1 o'clock in the morning, you can.
Yeah, I think that's whoever, because that's
if there's a market, like there'll be market makers.
There's always a market. There's always people that want to do it. So eventually software connects those people. Yeah. And, like with Rally Road, we're seeing a which
becomes its own exchange. So technically,
it's human to human. It's peer to peer. It's like Venmo.
But as it should be, very decentralized. Let the humans trade.
Let the beasts go at it. Buyer beware, ceteris paribus, guns and butter. Everything. What old is new, unleash the homer. We don't know, but Howie Town's going to have 24/7 relaxation and 24/7 investing and trading. It's whatever.
Hold on. What does the trading look like? How do you enter orders? Do you just think about it and it buys you the shares? Like, how do?
I think that's dangerous. I still think it's the successful people.
Should I buy $1 billion?
I think, as I've learned by making mistakes on mobile. And too few clicks to make a trade. I think the good investors don't need speed. Good investors don't worry about nickels and dimes. Good investors worries about 50, 100% wins.
Yeah.
And so I've always said slower is better. Costs matter. So I think we've got to that point. Now we have to slow things down and say the best investors are not trading every day. The best investors have the ability to watch prices, but not react to prices.
And have enough going on, having different things going on, different strategies.
Enough alerts and sensors in your own mind and a social network that, I don't have to watch all-time highs every minute to see something that I follow break out. It's just natural. If you set up enough workflow around yourself, the good ideas kind of come to you. And so I don't know what that UI looks like for that. I think it's just a combination of desktop, watch, AirPods, same stuff we have.
Are we drawing in the air?
I hope. I hope, because I'm
When's
doing
that coming?
now.
When are we drawing in the
Doing
air?
that now, and people just think I'm crazy and walk
I
away.
want to draw in the air. Like I want to just be like, and then like I see the chart or something.
Yeah, I think that's coming.
And what about the phone? When are we no longer going to need that? When does that go away?
Call me as soon as my mom, God bless her, passes away, because she's the only one who uses it to call me at weird hours. So I think, I'm hoping it lasts forever because of my mom. But
I think we'll always have a device.
Yeah, it's like a blankie. I think there's people that, the iPad is pretty amazing and very little competition if you think about it. And it's such a form factor, whether in a world where I'm standing, I build a workflow there, a standing workflow. In a world where I'm standing, screens matter still, just a context.
I think you want to be that cartoon on your wall, the guy in the car with all those things. I think you want to be that guy.
I totally love this world that we're in because it's so immersive, but not too immersive. I never was into like the Second Life and the Sim City and video
Yeah,
games.
I never understood that either.
I'm one step away. I'm not going to strap on the goggles and go to Neverland and eat digital popcorn. But I like disappearing into a Netflix movie or a conversation.
Okay, hey, what about this? What about like an Oculus situation where we just put it on and now we're all like in a conference room together and I could be like a dinosaur and you could be like Hulk Hogan and, and we have like a real meeting and we're all like our own character in like, or we're serious and we're ourselves. We could, I don't know.
Well, there's
when does that happen?
now, so you could do that tonight with the right weed.
But when does it go from Zoom to Oculus?
Hopefully when I'm dead.
Really? You don't think sooner?
I think Zoom's good enough. We need to go back to human contact before we go into Oculus land.
Do you like these questions I'm asking you? Do you like these questions?
Well, once it's edited, it'll be good. But I think the Oculus benefited here. I think the push forward, the technology is getting better in a world where we don't have entertainment in the way we used to have entertainment and people don't want to do mock-up drive-thrus. I think Oculus is getting a really good push forward. For Facebook, again, is that niche or is that bigger than we think? I don't know. It's hard for me
when I don't use class. Have you seen the kick? It's super sick, supposedly.
Yeah, I just think the world that I'm still stuck in is pre-internet world where I was on the other side. I think there's just 40 years of still, maybe not health clubs. Peloton is kind of the crossover company. There'll be a few more crossover companies going public probably in the next few years. We're just like, oh my God, why did I not even, like, I hate this. Like Peloton is just exploding and not to go back. DocuSign exploding, even though it's not an overnight success and not to get back put in the box. There's certain things that just can't get put back in the box. Oculus is not there yet. Thank goodness.
Interesting way to think about it, put back in the box.
Yeah. And the chip is like so close in your head, it's like halfway in. And
you want to know something? Before this, I was using DocuSign sometimes. Now I only use it, so that's one that's like
contact tracing. So I'd say the next crisis will be a chip in the body, because a chip in the body right now, you can wear a bracelet maybe for contact tracing, because you can't take a phone into certain places. So if it's a government place, right, and you can't take a phone, so they're going to have to do contract tracing.
And imagine if the chip can take your blood and you can get tested for things.
Imagine if the chip just alerts you to things breaking down. Why wouldn't you want a chip in your body? So I think Oculus is not the most important thing. I think if Oculus is the only thing that you could strap on your body to get alerts, but you got a phone and you have the AirPods.
What's the short then? Okay, we're talking about all these longs and where we're going. Who's the loser?
Well, I don't think people should focus on shorting, but the loser continues.
We got to know who's the loser. There's got to be a loser. Who loses?
Yeah, you have to be careful, because old people are going to get meaner and meaner because the world is moving faster and faster.
And then what about us? I mean, you're older than me. What are you worried about?
My network. I got to have friends that can hide me out, can take care of me. Right when they come,
bring you tacos.
Bring me tacos, because my kids won't do it, because these millennials, these homers won't take care of me. So I think we're at that. You and I are living like 6 months ahead of the world, where we're not trying to get too far ahead of it. That's why we do these discussions.
Yeah, it's true.
And other people.
Yeah, this is all hypothetical. Like this is all like just fun to talk about. But yeah, we're not going to do anything about anything.
and you have to always bring it back to the next 6 months to really make money. I think if you have tons of money, you want to think out 10 years like Bill Gates, good luck. I mean, I think that's more of a headache.
Let me ask you this, because you've mentioned this before. If you think too far ahead, you're going to go broke because you're too early, right? Why don't you talk about a little bit about that?
Yeah, I think it's the job. That's why I read venture capitalists. It's a job. These venture capitalists are giving away future thinking. So if you can live 60, maybe if you can get tomorrow's Wall Street Journal today, you're rich.
If you can do what?
Get tomorrow's Wall Street Journal today, you'd be rich. That was the old story. Today, you don't have to have inside information. We all have been, whoever your social network is your inside information, right? Everybody has unique data. So you don't really need inside information. So now it's a question of how far ahead of the curve do you want to be? And it's like the three bears. I think the right place to be to enjoy your life is 3 months to a year ahead, because it's painful to live too far ahead.
Yeah.
And then your ideas work 3 years later because you ran out of money. And there's nothing more frustrating for an entrepreneur than that. So I think, living in the present, living a little bit in the future is the proper way.
A good example that I think about, imagine if Change Tip was around in 2017. Would that have been a home run?
Yeah,
I would have stuck.
It would. Again, if a founder raises the right amount of money and spends it the right, like you can last forever, but you got to keep your energy up, and you got to there's so many things that can go wrong the longer it takes for you to get product market fit, or till the world sees the product the way you see the product, right? So domain experience matters, and then not living too far in the future helps. And then once you are there, like a Bezos situation, he has to look a little further ahead because the beast is such a big beast. But part of the joys of just living life is living in the moment and then living just 3 to 6 months in the future. And you can really do that by just following good venture capitalists giving away this information for free. You just want to peek around the corner. You don't need sure things. I'm living proof, and you're living proof that just a glimpse around the corner is pretty much all you need. So, play with the toys. Don't be too cynical, but definitely be skeptical and cynical. But, surround yourself with people that think positively and are using all the toys, because the signal from those people is really what matters.
After I get it, I reinvest. After I get it, I reinvest. After I get it, I reinvest. Stack and put it back in it.